So Nio delivered 24,000 cars in April of this year, which is substantially higher than the 15,600 of last year. We can also see that that puts us around 45% higher than the same period of last year. So the first 4 months of this year is roughly 44.5% higher than the first 4 months of 2024. Or you could also say that it's 20,000 higher than the same period last year. Now going to the weekly insurance numbers, we can see that Nio had a really strong last week. It's almost 8,000 deliveries, which is, in the same ballpark as Li Auto, Xpeng, and also Tesla. Additionally, we can see that in this graph here, Tesla being the red and Nio and Xpeng being white. Nio and Xpeng are yet again outselling Tesla substantially in China. We can also see that other than those weeks 9 through 13, Nio and Xpeng has obviously outsold Tesla in China this year. This is a bit surprising for me. I would say at the beginning of this year, I was expecting Nio and Xpeng to outsell Tesla maybe 10 to 20% of the weeks of this year. But right now they are outselling Tesla more than like 70% of the weeks of this year. So it's much more good news for Nio and Xpeng and really bad news for Tesla. And speaking of Tesla, knowing that Tesla has a market cap of 925 billion, Nio sitting at less than 10 billion, I would say these are very big differences in terms of the actual real world performance of the companies and how the market values them. Now, of course, Tesla has been essentially making money over the past 3 or 4 years, and Nio hasn't, and it's difficult to know if Nio will be able to do that this year. We know that the management is very clear that Q4 will be profitable, but Nio's management is not to be trusted since the recent history over the past couple of years where they promised a lot of positive stuff and essentially none of it has been enough. Remember that when ET5 came out, the discussions was that that car would deliver multiple thousands every week. Didn't happen. We know that then they promised that Onvo would sell 16,000 cars in March. And how many cars did Onvo deliver in March? We can see quickly here that Onvo, like for example on March, they delivered roughly 4,000 or 5,000 deliveries in March. So it's difficult to trust the management in terms of how much we can believe their discussions about profitability. But I would say that looking at the actual market cap of the two companies, it's a giant difference. Either Tesla has to go down or Nio has to go up. I don't know which one is going to happen. But looking at also the lithium carbonate price, which is a huge cost for the battery manufacturers and hence the cost also for the car makers like Nio and Tesla, we are still going down much farther than I even believed. Right now we are well below 70,000. In fact, we are breaking potentially new lows on the lithium carbonate price. So this could be good stuff for all our car manufacturers. And the big question is that since we just recently, a couple of weeks or 3 weeks ago, got Nio's Q4 earnings, and it wasn't good, to be honest. The net income was almost 1 billion in net loss. We know that Q1 will be really bad due to the low delivery numbers in Q1. But that quarter is still yet to be released, probably 8 weeks from now, maybe at end of June or early July. But then Q2 numbers going to be interesting. Knowing that April came in at around 24,000 deliveries, it means that my target of 80,000 is reachable, because if we deliver 24,000 in the first month of this quarter, right, that means that we need to deliver 56,000 across this month of May and June. Is that possible, where that would put us at around 28,000 deliveries for May and June? I would say that is possible, especially if we have anything like this past week, like 8,000 deliveries. That would definitely put us well ahead of those numbers. I mean, 8,000 a week, we could probably do like 35,000 on average for May and June, which means that the entire Q2 delivery numbers would be 35 plus 35, that's 70, plus 24,000 in this current month that just passed in April, and that puts us at around 94,000 deliveries, which would be a big surprise and also probably would cut down the net loss to maybe closer to 600, maybe 550 million. So that could be a positive kind of reaction. In that scenario, I would see the stock kind of reacting quite substantially, but it has yet to be seen. We know that Q1 is going to be abysmally bad. So again, difficult to say, but currently I would say that Nio, we see that the incentives that they are giving in terms of sales is kind of working. Let's see how long they can continue with this. Again, we have seen previously that these like 1 or 2 weeks of uptake in deliveries could substantially come down or go up. So the key to success here is for Nio to continue to deliver these kind of numbers. And trust me, like if they do 8,000 a week, maybe even 10,000 a week, we are going to quickly turn into a profitable company. But again, I think we are at the point where a lot of small investors has lost money on Nio stock. And we are well behind those kind of times that we can only say, oh, what if they deliver 8 to 10,000 cars a week? Let's wait and see. Don't put your hard-earned money in a company that has a really, really bad track record. I mean, for example, look at the vehicle deliveries, right? This is the graph on vehicle deliveries. Sure, it's trending upwards, but there are huge up and downs from quarter to quarter. Obviously, Q1 is usually bad. We can see that Q1 and Q2 of 23, Q1 of 24, and Q1 of 25. But currently, we're on the path of doing a probably all-time great Q2 of this year. So at least for that part, it should be good. We can also see that still when it comes to Nio infrastructure, the battery swap stations, they build around 50 new swap stations in April. Currently, the fleet size is at around 760,000 cars. And currently, they're averaging roughly 85 to 90,000 daily swaps per day, which puts us at around 27 to, let's say, 28 swaps per station, which is well below the required 60 that we need for profitability. Where do we get the 60 number? Where the management has mentioned that number on multiple occasions, starting from a couple of years ago. Now, my critiques towards Nio management has been that the newest generation Gen 4 stations, they can handle like 480 swaps per station. So if the average swaps per station is at around 27 to, let's say, 30, why do we need so many new swap stations? Essentially, they're not even using the swap station at more than 5 to 10%. So they are nowhere near the limit of what the stations can handle. So why is this urgent need in a company that is losing $1 billion a quarter? Why do we need so many swap stations? Again, I don't think that makes sense. And I think this is a criticism towards the management that more and more people finally are starting to see. So hopefully they change their tune. I would be really, really sad if I see the management again expand the swap stations at 100 swaps or so per single month. I think that's a really, really bad investment. Hopefully they will tune down their spending on swap stations. Again, they got some incentives from local governments, they got some incentives from partners, but still I see there is absolutely no need unless we see an extreme increase in sales, which would push the average swaps per station much higher. There is absolutely no need for that. Even if they sell 500,000 cars in the up and coming 12 months, maybe let's say 600,000-700,000 even, we would be just barely at 60 swaps per station, which is still well below the limits of the Gen 3 and Gen 4. So again, it just doesn't make sense. Even in a wild card scenario, they start to sell 50,000 cars a month. So finally, looking at the stock price, again, $4. I would say, market cap of 9 billion. Potentially, it's very cheap. Let's put it this way. But the reason why the stock is so cheap, in my opinion, is that the market doesn't trust the management. And that is a correct stance. I don't think we should assume that what the management says is going to be true. I don't think that we can just assume that Q4 will be profitable. In fact, let's look at my numbers for Q4 of this year. So we can see here that for Q4, I'm expecting Q4 of 2025, 110,000 deliveries, right? Is that possible? For sure. I mean, that would be just around 35,000 deliveries per month, and they are already at 24. So that is definitely possible and realistic. They could definitely do even more than that. They could probably do 130,000. But even at 110,000, and even since I've revised my numbers recently to give them huge margins, 20% gross margin on vehicle sales, or 17% vehicle margin, right? We can still see that they are losing 300 million in that scenario. So I have a hard time believing how they becoming profitable. Some people are arguing that maybe they're gonna cut their R&D budget, maybe they're gonna cut their sales and SG&A budget. I would say that that's unrealistic. Remember that the R&D budget has already stagnated. You can see this on this graph there. The R&D budget is essentially stagnated. SG&A is going up with the increase of vehicle sales, and they have truly previously shown that in order to sell more cars, they need to spend more in the sales. I don't see how that kind of part of their cost structure will change. So unless there is a wild card, we know that again the lithium carbonate price going down, that could be the wild card depending on the contracts on the battery and the battery manufacturer sales that they through, let's say, BYD or CATL, but I don't think so. One other wild card, as some of you mentioned in the comment section, could be the single fact that maybe they start to sell the CO2 emissions like Tesla does. And how important is that? Well, look at this. So looking at Tesla's last quarter, the blue being the revenue, the red being the gross profit, the white being the net income. And you can see that over the past couple of quarters, that green part, the small green part, which is regulatory credit, actually exceeded the net income. In this graph, maybe it's more easy to see. Gross profit in red, net income in white, and the green being regulatory credits. And we can see that Q1 of 2025, so this last quarter, Tesla actually earned more money from regulatory credits than the net income. And that is quite an interesting dynamic. If anything like that happened with Nio, that could be obviously very good for the company and the stock price. But again, we are now, speculating. How do I know that? Obviously, there's no facts behind my argument there. It's just like speculations. And currently, with everything that I've said about the Nio management, it's very difficult to trust them. So yeah, unless they give us any real data, I would say, this Q4 earnings and profitability, let's wait and see. But anyways, again, to summarize, I think it was a nice, uptake in terms of weekly deliveries this past quarter. They are still outselling combined sales of Nio and Xpeng compared to Tesla. I see this as a huge warning towards Tesla investors, that their sales is tanking in Europe, their sales is not good even in US, I would say. So for Tesla, unless this FSD kind of thing starts to show its actual legs, which I don't believe, I simply don't believe that Tesla can solve it only by cameras. I think there's so many difficult issues that you're going to face if you only rely on cameras. And there is no redundancy. And I think the moment this FSD thing is involved in some accidents, it's gonna, derail the whole company. So unless Tesla has something up their sleeves, I think this is a really dangerous place for stock investors. Again, the market cap being 900 billion, right? And they're soon not making any money. I mean, at this rate, when they start to give incentives to people to buy their cars across Europe, and people still not buying the cars, the question is then, how long will they even be profitable? I mean, the net income is tanking right now. Look at how far the net income, the white section of the graph, is tanking. So for Tesla, I think this is potentially really, really tough times ahead. And for Nio, let's wait and see. So anyways, thanks for your time. Please like, subscribe, and see you in the next one.